This meeting is being recorded.
Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the one and only Taylor from Life Goal Investments. How you doing, buddy?
Doing great. Thanks for having me, Michael. Appreciate it.
Oh, yeah, man. So we've had some fun today. We've talked about the Fed kicking the stock market in the nuts. We've talked about headline and core inflation and the challenges ahead. I actually want to bend your ear a little bit about something that very few people are talking about. And that is the fact that the dollar is getting stronger.
Yep.
And I fear there may be some unintended consequences around our global economy because of the strong dollar, because of dollar-denominated debt, because of just all of this interconnectivity that really might surprise a lot of people. So when you think about the strong dollar setting all-time highs, and I think again stronger today, what are some gotchas people should at least be thinking about that could get us next year?
Yeah, well, so let me give you a little context as to how the dollar trades versus equities versus bonds versus treasuries, some of the most liquid things on the planet.
Okay.
The equity market is the deepest, the currency market is the deepest and broadest market there is, bar none.
The currency
more
market.
Dollars. Yes, there's more dollars traded there. So it is the most liquid. So it should be the most efficient. And what I mean when I say that is it should give you the best look into what's going on from broad economic standpoint of anything. Better than Apple stock, although that's pretty darn efficient itself, et cetera. This specific is the most liquid, largely traded basket of currency or of assets in the world. Okay. So that's a little context to begin with. Obviously, what we're doing right now is raising rates, and raising rates is pulling very, very hard the U.S. dollar higher with it. But what's interesting there, and not telling you anything you don't know, is that other central banks around the world are also raising their rates as well to curb inflation. Inflation is a global problem right now. So 25 out of 39 of the major central banks in the world are also raising their rates. So with that, the dollar is still strengthening against their economies. So it's not just the fact that we're raising rates that's driving up, because everyone else is too. So we're all at equilibrium from that standpoint. But the dollar against the global basket of currencies this year is up 13.7%. This is not the stock market. That's not normal. 13.7% movement in currencies are absurd. And that's what we've experienced so far this year.
And it's certainly absurd for the dollar, right? We're not talking some little emerging economy.
Right. We're not talking about the Argentinian peso or something like that, which is,
this is
on the other end of it, by the way.
Yeah. So again, and the other thing that people need to realize, again, is just casual observers, is there's a part of the world called emerging markets. Right. These are generally speaking the riskiest. Yeah, they're small, right? They're trying to figure it out.
They're usually Euro-Pacific and Latin America are the two areas where, and Africa is generally considered frontier markets, but the Euro-Pacific, the island countries over there, the Far East, and then Latin America is largely who's deemed as emerging markets.
So what is very interesting about those markets is they, generally speaking, can't issue debt in their currencies because there's not enough faith that they just won't debase their currencies.
Correct.
So as they're looking to grow and invest in their countries, infrastructure, jobs, all of that, they very often have to get the debt in dollars, which means their interest payments are due in dollars.
Correct.
And let's just say a stronger dollar is not welcomed when you have dollar denominated debt. It could be a real problem. One of the things that I think happened with Sri Lanka is their dollar dominated debt, besides, fraud and all that other stuff, became a problem. And I think we may see more of it.
No doubt about it. The emerging market debt is a massive asset class, to be honest, because people look at it and say, hey, there's a really nice yield associated with when we're buying those bonds. So it's a massive asset class that's very investable for retail consumers, for institutions, for pensions, et cetera. It has not been a good asset class this year for that very reason. As Michael said, and just to kind of make it more crystal clear, maybe, as the dollar goes up, and you have to use this to buy that, you have to use more of your local dollars to pay the equivalent debt in US dollars. And all of your income, your GDP, your tax is all based in your local currency. Yeah. And then you buy that super expensive currency with it because that's where your debt's denominated. And it's really tough because Michael's point is so fair. It's like the full faith and trust is not in your currency. And that's why you can't issue the debt in your currency. You won't have a buyer on the other end of it.
Yeah. And then the other thing that you brought to my channel, I think it was 4 or 5 weeks ago when the dollar spiked the first time and we went on parity with the euro, which I think is now broken, meaning the dollar is above 1 to 1, is the impact on S&P 500 earnings, right? You want to share that little wisdom again?
Yeah. This is just kind of a historic rule of thumb, the way it works. As the dollar increases, every single point of increase, so right now we're at almost 14% increase year to date, there is a 0.5% hit on S&P 500 earnings, all things being equal. So again, if we're up 14%, cut that number in half, that's a 7% hit on S&P 500 companies' earnings. That is massive, and that's not fully reflected right now in stock prices.
Yeah. So we've had, again, we've had earnings seasons, more earnings cuts than previous seasons. So more and more companies. We actually had several companies talk about the strong dollar. I think that's a trend that doesn't stop. The dollar's up today, I believe, and I think it's I see the Fed taking funds rate to 4. I can only imagine what that means for the dollar and then all the other ramifications. I think this is a tsunami building. So I don't think this lands on our shores tomorrow or even next week or next month. But when I look out through the winter, which I assume is going to be a pretty slow slog, and then I look into next year, maybe the summer, there could be a lot of pain because of the strong dollar. And I don't have a good feeling.
No, I don't think there's any doubt about it that the dollar is at least trending in that continued direction. And it takes a big reversal because, again, this is one of the most efficient markets there are. So it sniffs things out much further in advance than other things do, because, again, the most dollars being traded somewhere means there's the most opinions simultaneously being forecasted.
Yeah, buyers
and so
sellers.
With the dollar continuing to go up, that means the broad opinion by more people than in other markets is that the dollar will continue to strengthen. And again, up 14% year over year is like a bonk.
Crazy,
I'm sorry, year to date. Year to date, up 14% is a bonkers banana type number. I don't know. I should know this, that if you look back through history, what the biggest year is. I don't have that number offhand. Maybe I'll look it up before our conversation next week, though.
Yeah, it's got to be sometime. It could be sometime in the 80s when
Sure. Yeah. After we yanked rates higher for a decade plus and then continued to and forced our economy into recession. And what you'll start to see, it's funny, this kind of is self-perpetuating as well, because what you'll see is that certainly S&P 500 earnings do get hurt, but it's also a really good backdrop for a CEO to land but did you see the currency? That's what caused us not to make earnings.
We didn't miss because we didn't sell anything. We sold lots of stuff. It was just all foreign money, and it just hurt us on our conversion.
What's funny is it's great because analysts can actually look through and see exactly what the currency manipulation has been, or the currency moving back and forth has been, and their effect on earnings. And you can tell the ones that are friends of the company, because that's a little known secret too, is that analysts are friends with CEOs.
Of course.
And CEOs obviously have analysts that they like, so they'll call on that person before someone else. And then you'll get the fastball. Yeah, but I actually looked at your balance sheet and I could see that it was only a 4% move based on currency. What is that? Because
where's the other 9% hit? Again, I think the strong dollar is just starting. I think it gets worse before it gets better. And I do think there are some macro surprises coming. Are they going to be kind of these macro cascading? I don't know. Are they one-offs? I don't know. I just think they're out there, and the boogeyman, I think there's a couple surprises sometime between now and next summer.
Yeah, and there's lots of things that go on in the winter months that don't go on in the summer months, like I'm not saying COVID necessarily, but flu season, et cetera, that can drive big changes in underlying economic currents that we might not be forecasting for right at this given time. Apparently, Australia, and I only know this because of economic reading, whatever, is having a really tough flu season. Their flu season forecast generally where we are. Again, not a scare tactic by any stretch of the imagination. Don't go out and change your lives based on flu season in Australia. Yeah. But that being said, like, those are the things you have to consider. The black swan type events do happen. So when you're investing, which is what we talk about, like, those have to be kind of thought about, and you have to diversify some of those risks away. And that's something that when you get the YOLO trade that happened late summer again, where meme stocks take off, it's like, come on, guys, we've seen this playbook.
Well, since I got you, I'll just throw this stat out. You probably know this, but historically speaking, all the way back to 1948, do you know the worst month for the stock market?
September.
Guess where we're about to enter.
Here
Here we go, folks. Time to buckle up. Taylor,
you know what, like the Wall Street narrative on that is like Wall Street was in the Hamptons for the summer, not paying attention. They come back and they're like, okay, now let's digest.
Yeah. Oh, shoot.
Man, that was a fun summer of drinking, but I actually have to work now.
I got to work now? What the hell? Taylor, where can people find you?
Yeah, find us at Life Goal Investments on Instagram is the best place. Again, kind of the intersection between economics, markets, politics, all jumbled into one there.
There you go. Thank you. Keep doing what you do. Your daily stuff is awesome.